So I'm a partner at Internos. I handle opportunistic investments mainly across Europe, not in the UK, but Spain, Italy, Portugal, Germany, and France mainly. Very active in all the alternative sectors and anything we can find which represents value-add arbitrage opportunities in the continental market. France very much on the list, or back on the list for our investors. Which is a big change, I think, from the past few years.
Great. Guillaume, we'll just go down the line.
Hello, Guillaume Turcas. Sorry for this, but I'm the only one with no tag on my thing. I'm on garden leave for a couple of weeks, and I used to be at AEW, overseeing the asset management and sales business for France, Benelux, and Spain. And well, I'm just happy to share views on the French investment market in the minutes to come.
Super. Raphaël.
Hello, so my name is Raphaël Tréguier. I'm the CEO of CeGeREAL. CeGeREAL is an office REIT listed in Paris, Euronext. We hold today 1.2 billion of office assets, mostly located in Paris. I'm very happy to be there and share collaborations with you.
Great. Alfred.
Alfred Fink, I'm a partner in Paris office. I think I have not to introduce TaylorWessing anymore. Paul has done very well on that. So Paris office is about 70 lawyers, 20 of them are more or less involved in real estate. We try to take care of all aspects in the real estate market, so doing investment, doing financing, doing leasing, doing lease litigation, so everything you can imagine. And so far, we like all the asset classes. Perhaps we are not so much into shopping centers, but all the other asset classes, we have a nice track record on that.
Great. Serge.
Serge Bacconnier. So I joined Berlin IP mid-April, so coming from BNP Paribas, where I worked in real estate finance in Paris first and then in London for 2 years and a half. I joined Benjamin Cartier-Bresson and a team of 4 people in Berlin IP in Paris. Berlin IP is mainly based in Germany in terms of activity, where it has 75 to 80% of its portfolio. Paris, there is a strong will to develop the activity, so I think we are in a very good timing, and with the momentum on the Paris market, I think there are a lot of things to look at and to do for financings.
Great. Arnaud.
Good morning to all. I'm Arnaud Violette. I'm the General Manager of Colliers International in Paris. We're doing brokerage, but also workplace strategy, both for occupiers and landlord. And I will try to give you some view about the tenant and the occupier strategy in Paris, but also a view on the marketing property, depending on their location, and maybe some more information about the water polo, which is in fact the natation, the big swimming pool for all the events, not only water polo.
Great, good. And if you've got any questions that you want to ask, please do just indicate or simply ask them. The polite part of the whole discussion is now finished, so if you've got something you want to say, just say it. Good. And again, I'll ask questions, but if anybody's got something that they want to say, you don't need to ask me for permission to speak, just dive in. Let's start with you, Raphaël. We heard from Oliver there also just about the positive fundamentals in terms of the economy, also in terms of the political situation. How much are you seeing? Obviously, Germany's also had kind of positive economic growth. How are you seeing it in terms of France in comparison to the other markets? Are you seeing investors looking at France in a different way?
Well, I think that the key message is that the business confidence is back in France. And coming back on what I heard about the financial crisis and the way France behaved versus its peers, it's quite interesting to remember that France with Germany was the only two countries in Europe which really did not face the financial crisis as the other countries like England, Spain and Italy. We don't have so much debt, and there were no distress situation and so on. So the main reason why we haven't behaved as well as Germany is our unemployment cost. Germany succeeded in facing the financial crisis thanks to shoulders initiatives, which crystallized the employment cost very low, But now that Macron decided through the executive orders to facilitate the discussion between the top management and the employees, I think it will come back and we really have some very positive impact on the GDP. I was a little bit surprised, but positively surprised to see that 9 months ago we expect a 1.3% increase in GDP, and just 9 months after we're already at 1.7. So I think it's very positive, and the fact that both Emmanuel Macron and Angela Merkel are very close and happy to work together is also very positive, both for our countries but also for Europe.
Okay, good. And Alfred, you're a bit like that arrangement with Angela Merkel and being a German living in Paris, so you've got both of those connections. How are you seeing that? We've obviously seen, French leaders before say that they're going to do something and then actually not been able to do it. What's your sense of it this time? Do you think it really is en marche?
I think it's en marche, at least from what I see. I think the news were always a little bit of discussion that Mr. Macron has very bright ideas about Europe and what he would like to do. He did a very nice speech at the Sorbonne the other day where he thrown out a number of ideas how Europe should develop and what we should do to get closer to each other. And then there was Madame Merkel sitting, and I must apologize to say that she had not a lot of very bright European ideas to get closer to France. But then she was saying to Mr. Macron, get first of all the 3% right in debt in France, and then we talk about your ideas. So I think they are really close to each other, but there are also very tough discussions about the seriousness, the frameworks, the financials, which has to be put in place. And I see simply that Mr. Macron is delivering on what he said in his, in his speeches before the elections. And I think that is a surprise to a number of French people that there's a politician who tries to really execute what he's saying. And he had a very smart approach also, for example, for the negotiations for the labor law decrees which has been issued in time. He has not discussed it with all the unions at the same time, and he picked one by one and discussing bits and pieces with each of them. And all of a sudden there was not a kind of a phalanx, as we say, of unions beating on the politician. And so they were much surprised about how he's going about politics, how he's doing that, how he's managing to get his decrees through. And I think we were talking about 9 months. I think since he is elected, it's 5 months with 2 months of holidays in France, and has already done one of the very big, changes, which is the labor law decrease. And as a lawyer, I must say, he has done something which was unthinkable at least 12 months before. So having a clear framework for getting people out of work, to dismiss people, there is a possibility to negotiate somebody out. And all these kind of things which facilitate for an employer to get the number of employees right. So I think we see there a major change. And I told to one of you over coffee, I'm just experiencing in a hotel to get rid of the general manager. And you see how that works out. It's completely different. And there's a framework, there's a time scale, and there's at the end of the day also a pre-negotiated démarchement, as we say, indemnity to be paid to the person. That is something which is predictable. And that is a big change for people running businesses, that there's a kind of predictability how you have to do things and what will be the cost at the end of the day. And so far, I think it's really a major mind change also within the economy. And that is, for me, the reason why we see the pickup. There's an emotional aspect. Psychologically, people are trusting that economy will go ahead. And therefore, we have also, all unions were calling for a strike, and only a few people came, to be very frank. So I think it's really a major change, and I agree with that. I think you get the 3% point, and then France and Germany will certainly move ahead.
Okay, and Arnaud, are you already beginning to see changes in terms of the investors who've been looking? Have you seen a change? We've obviously, there's that change of sentiment maybe for the occupiers side, but are you also seeing it in terms of the investors that are looking at France? Have you seen a difference in that, or has that remained steady?
No, it doesn't remain steady. In fact, for the one that already knew France, when they look at core opportunities, it's just fighting against a French player, and they know that the yield are really aggressive. But as you said, they can find also solution, let's say close by Paris. But what is also of importance is to see newcomers in the market looking at potential opportunities in Paris regions, but also in other cities all over France. So we cannot measure right now what is the direct impact of Macron in terms of appetite from foreign investors. But it is true that no matter what, France is on the top of their list. And for the one knowing France, they're coming back harder on Paris regions and on some other localization. We were talking at the cafe, like some Bordeaux, like Toulouse. Airbus headquarters is in Toulouse. It's not anymore in Paris. They are going to keep a small office headquarters in Paris for, let's say, the old-fashioned Airbus EADS manager. So this kind of things also give us a better view of the importance of France secondary localization against Paris.
Okay, good. Ludovic, obviously you're sitting here in London, so you kind of see things also from the French perspective, but also how it's seen from here. Is your sense also that everybody believes that the Macron reforms will go through and that there's a positive sentiment around that? Or is there an element of doubt here about that from the international investors looking towards France that you meet?
I mean, first of all, let's not forget Macron, he arrived in May 2017, took office. I mean, he had a government in June. I mean, he went on holiday in August. I mean, not all the increase in GDP is due to a Macron effect. I think let's not overstate that. That there's, France economy is worldwide and it's world growth, first of all. And the fundamentals are good. I mean, if you look at what investors are looking for, political and social stability, we haven't had that in France for 40 years. It's unbelievable. You look around France and you look at continental Europe, you've got a mixed government in Spain, Gentiloni in Italy, who doesn't really have power, and there's elections coming up, May 18. Merkel still strong, but less strong than before. Netherlands just have a government. Belgium we don't know if they have a government, and being respectful with the UK, we don't really know. I'm not talking about May. So if you look at the continental Europe, France is the only one with a stable government, and stable for the next 5 years, and my money is on stable for the next probably 10 years. That's the first thing. Second, France is the only country, I would say, in continental Europe who has strong demography. Demography is probably the best proxy for long-term growth. You can't beat that. So if you look at the next 5, 10 years, growth is going to be there. Again, if you compare with other countries, you look at Spain, Italy, Germany, they don't have a strong demography. The only one with demography, is the UK, really, as a big economy. So it is very important if you look at the fundamentals of the economy from an investor's point of view, that you have the world growth, you have strong demography, and you have a strong and stable, to catch a phrase that was pretty famous in the UK.
Yeah, I wouldn't use that. It didn't go so well, that phrase.
So yeah, it's definitely back on the radar. It's if you don't invest in France now, when actually are you going to invest in France?
Okay, good. We picked up there some from Ludovic, some of the key drivers. Guillaume, what are you seeing as the drivers at the moment? And do you buy into the regional story as well? What's your sense of the drivers at the moment for France?
Maybe just to pursue on what Ludovic was saying, because here I'm the troublemaker, so I have no strings attached. I don't belong to any company, so I can talk totally freely. Maybe just to set things a little bit clearer is obviously there's a Macron effect, but Paris has always been a must-stop shop. Basically, when you're because this is more of the discussion we're going to have here. You're all internationals, investors, benchmarking cities rather than countries. And basically, when you want to shop all around the world for real estate, the first stop basically is New York. Then you have London, Paris, and Tokyo. So it's always been on the map. So Macron's arrival is obviously a good thing and is more a victory against populism. So it has more alleviated our fear against a potential Marine Le Pen or whoever could it be. So it's a very good thing. And as Ludovic mentioned, there's still a lot of things to be done. But just to set a red flag also in the discussion is we know that Macron and Macron's government is not very keen on real estate. So we've been hearing stuff, nothing's for sure, nothing's real, but we need to keep the dynamic pace we had through the political, the economical, through the real estate, with reassuring people and alleviate the fear in relation to what's going to happen to the global feeling and sentiment of real estate in Paris, notably in the consideration of tax purposes and all that comes around the investment in real estate investments, apart from the pricing of the yield, the pricing of the rent, etc. And from what we've been hearing those days, real estate is definitely on the radar for the government, for the Macron government, to potentially add some more tax. We don't know when, we don't know how, but we have to be very careful with this because this could, maybe slow down a little bit the flow of international capital that is being coming into Paris.
Okay, and Raphaël, is that to do with the structure of it, that he's not so keen on funds, or is he keen on listed? Is that good news for you, that it may put some people out of the market and you can compete more better, Raphaël? What's the situation? I mean, there is definitely a sense of him not being as keen potentially on real estate, I think. But I don't know, do you agree or disagree?
On the long term, I can only disagree, but I would say on the buyer, I would say exactly the opposite what I think. So. Okay, just one reaction of what I heard here is that, of course, the French situation is not only due to the Macron effect. Our take-up has been increasing for the last 5 years versus London decreasing for the last 4 years. And I don't see many brokers shouting this news, but it's quite important to say that our take-up had increased over the last 5 years. Nevertheless, the Macron effect is real. Our PMI has been above 50 since Q4 2016 because the market has already forecasting either Fillon or Macron to come, and then it accelerates in Q1, and now it's at 57. 57 is the highest point of the last 10 years. It's very high. And thanks to that, it explains why our corporates are starting investing over the last 9 years. And this is the first step of growth. The corporates invest and then they employ. Thanks to this employment, they need more space and so on. And then it comes to the real estate market. And so this process has started. And it's mainly due to the Macron effect, to my point of view now.
Okay, so
the only point that I'm joining you about Macron not liking real estate is simply, if you look at the tax bill for 2018.
There's a different sensibility.
Yeah, absolutely. No, I think it's simply that he tries to direct money more to the stock exchange than into real estate. And that is, if you look at the tax bill 2018, you have the impression that you would like the individual, not the institutional, the individual to go more on the stock exchange. And I think if you see the money which is floating into SCPIs in France, that was enormous money which is going over there. And the small offices people are keeping in Paris is to lobby with the government. So actually everybody's lobbying that the shares in an SCPI should not be taken into the wealth tax for real estate. So I think there's still a lot of movement around that. But you see that Mr. Macron is coming from Rothschild, and he is very much very close to the stock exchange, and he would like to get that more going also as a pension plan for people. And in France, historically, as a German, I say that under the control of the Frenchmen around me, it was that doing something for retirement, you had a country house, or you have inherited a country house from the family, or something like that. So it's just going against this tradition to a certain extent, and I don't know if these, let's say, tax change modifications are sufficient to break into that. But I think the lobbying will go on, and we will see by end of November what is really coming out of the tax bill 2018.
Let's not forget just one thing. I mean, when Hollande came in, I think it was 2012, I mean, his inauguration speech basically was calling finance the enemy and saying we don't like the rich and we're going to tax them. And actually he did that. I mean, he put in that famous 75% tax, which may or may not have worked, but it scared everybody. The news was that. Macron came in and he said the exact opposite. Absolutely exact opposite. He said, the entrepreneurs, we want you. Rich people, we want you. We're not going to tax you more. We welcome you back. French people in London, we welcome you back. That kind of thing. Whereas going to be Eurostar full of French people, I'm not sure. Yes, but I think it's like
this is Ludovic's last panel in London.
The news flow from abroad is very positive.
I wanted to drill down a little bit into some of the kind of more detail of it. So what's happening in terms of financing? There's a huge amount of capital, obviously, seeking a home. How much of it is looking for financing? How available is financing? And what's happening with loans to value and that kind of thing? And I'll come to the regions in a minute, but let's look mainly at Paris, perhaps, for now.
Yeah, I think for investors today, it's one of the other elements. There is the environment, but there is also the banking environment is today very good for investors because they can look for funds pretty easily, I would say, today, with a very competitive banking environment. Rates are very low, and we can expect year 2018 to remain like this for a certain period. So I think it's a good it's good in the momentum with what is happening economically and politically, and I think banking is a good support, and there are a lot of banks. And what we are seeing today on the market is that they are ready to put big tickets on deals, and I can't remember. I left Paris during 2 or 3 years, but when I was in Paris, I can't remember banks taking such large tickets in deals, and I think investors for core products are looking for more long-term, trying to tap the low interest rates and putting them as far as possible. And you have behind maybe more long-term investors, and so they are looking maybe more at the central districts or central Paris. For value-add products, I would say the market is also here for banking. Then it's a matter of pricing and leverage, but the fundamentals are good because I think compared to 2007, where maybe the leverage was a little bit going too far. Today we are seeing, and Oliver showed us the level of the yields, and which are pretty much at the bottom. I think the banks are very careful on the level of LTVs and the covenants. We see very often soft covenants, and I think the level of LTVs are still pretty conservative compared to what we had seen in the past. So I think I think it's pretty balanced, and but banks are here to back up investors today.
Okay, good. And Arnaud, are you seeing? I mean, the economic sentiment, the drop in unemployment should all be very positive for occupiers and potentially rental growth. What's your sense of that in terms of the market, and do you think that's an attractive thing for the office sector, especially in Paris?
In fact, when you look at the incentives in terms of difference between headline rents and economic rents, it has been up to 2014 in Paris. The difference, the average was 20% between the headline and economic. Now it's 15%. And then in the other area of Paris, let's say that is close to 20 for Western Business District, little bit less even. And we still have some incentive of 20% on the other area. So the idea will be with the prime rent in Paris around 780 or 800 euros within the CBD, 530, 550 in Paris La Défense. what will be the best and what will be the strategy of the investor and the landlord to say, fine, I want to keep a better headline rent close to the economic rent, which I think should be the good strategy right now. And for the occupiers with the IFRS 16, knowing that no matter what, the incentives, they will have to pay them no matter what within the long-term lease. So it's getting better. The market is really well balanced. And I just wanted to add on the Paris Ile-de-France market, as Raphaël said, we are a resilient market. Apart 2009, who has been really a poor take-up level. When you look at large transactions, large transactions are making the market for investors because that's where the occupiers rent new or heavily refurbished office spaces. The average for the last 5 years is 800,000 square meters of large transactions in Paris area. It means it's between 50, around 50 transactions a year. And they are companies looking for new heavy refurbished or new office space. So it's a resilient market. And that's why we have this strength. I'm not going to be the investment funds agency, but I'm a bit the broker over there. So as Raphaël said, I need to push a bit more. When you look at the office stock of Paris region, 53 million, Greater London is 45. The playground of Greater London is 1,500 square kilometers. Excuse me, I'm in kilometers. The playground of Paris area is 800 square kilometers, half of it. Inhabitants within the Greater London is 8 million inhabitants, a little bit more. Paris is close to 7 million inhabitants. So no matter what, you can say that we are playing on a smaller scale with a more centralized countries. So that's why, for example, in office, our market is more resilient, and the activity when the economy is good. And for France, having a GDP close to 2%, I mean, it's like being in a good trend. Inflation rates in France are still low, so that's explained also in terms of size and density of the market why Paris is resilient in this behavior within the office market and investment market. So rents should not go up too fast. I don't think it's a good idea, but the difference between headline rents and economic rents should decrease a lot, especially in Paris.
Yeah. Okay. It's very interesting the fact that each time we talk in London or I would say abroad about incentives, there are a lot of emphasis on that. 15 years ago, 20 years ago, there was already 15 or 20% incentives. It's not brand new. It's not a creation from the financial crisis. No. And I know it's very different in London, in Tokyo, and New York, and so on. It's just different. This is our way to face a conjunctural event. So the facial rent has been growing over the last 20, 30 years, and the research guy can confirm between 0 and 2%. And this is structural, it just followed inflation. And our way to balance some decrease in demand and so on is just to increase incentives. But as a result, the economic rent has roughly the same behavior, a little bit more or less with a narrow scope that what you saw in London, but because we're a little more stable for other reasons, but we also adjust our economic rent and so on. There's another thing about stability is the fact that your GDP in the UK is super volatile, but on the long term, you have been battling for the 5th and the 6th rank worldwide of GDP. When you look at the UK GDP, it's with up and down, and the French one is rather growing steadily by 1 or 2%. And now you are the 5th and we are the 6th, but 5 years ago it was exactly the opposite, and each time we are battling for this, meaning that, on the very long term, we go exactly the same direction, but just different way. So we don't play with the cycle and volatility, but if you keep the real estate on the long term, it will be the same result, but in a different way. So it's very important to put the emphasis on the right thing. Please, incentives is not a big deal.
No.
And does not reflect the health of our market. It's just our way to balance, some decrease and increase in demand.
The important point is from the investor side, not to fight to get the best headline rents, because it doesn't make sense when the office, the buildings come back on the market. It's just a bit tricky. So that's why I think that headline rates should remain stable, a bit increasing in Paris, but not skyrocketing.
But there's also something which is supported by the legal framework. If you look at the 9-year lease, where you cannot increase as you would like. I had a discussion with one of your colleagues here in London who was telling me, well, if I do a refurbishment, then I get a rent increase of 20%. So I said, wait a minute, that you cannot expect in France. So I think that's important that you keep in your mind that you would like to have a steady growth if you have a lease in place, but you cannot jump from a rent 20% up because you have done refurbishment.
But it's even more interesting because when you're stuck with a tenant, you get your inflation right now.
Yes.
Yeah.
You don't wait for 8 years to make the mark to market. At the time you make your capex, you have it right now. So it's even more interesting.
Okay, good. I wanted to just do a little bit in terms of, Oliver mentioned there the capital that's coming in. Traditionally, always quite a lot of Middle Eastern capital coming into the Paris market. What's happening at the moment? Ludovic, are you seeing anything, or anybody can pick this up really in terms of just the trends that we're beginning to see more US money coming in? We've obviously got German money increasingly coming to London at the moment. What's happening? Are you seeing different types of investors coming into the market?
I think, well, no. Short answer is no. I think we've seen the same investors coming into the market.
I just crossed that question out.
We still have, your US pension fund and your German pension fund, which are still going to be active there. Simply put, I think the difference is they've adjusted their risk return. So they haven't adjusted the risk; they've adjusted their returns. They've lowered the return. We see it across the board. Germans and US pension funds have, your opportunistic went from 18 to 15, and your core plus went from 10 to 8, which, given the level of debt and where interest rates are, it's very feasible to achieve in France. What's changed though is people are actively looking in France, which they were not a couple of years ago. We get people calling us and saying, do you have assets in France? That's never happened before, especially German funds. That's definitely the case. So yeah, there's a difference. Is the nature of these investors different? No, but are they more active, more willing to go into the market? Yes. Finally, I would say there's a little bit from the Middle East, but both in terms of the research and the forecast, I don't think it's going to have any kind of impact. It's completely opportunistic.
Maybe to pick up on what Ludovic was saying, you have to bear in mind that in Paris the market is obviously dominated by the French players, so at least they account for approximately 55%. So the main insurers and the main also retail real estate players. But the funny thing is, as of now, is that those people, so the French institutional and the retail players, they have massive money to invest. And on the top of that, you have also all the international players that are the German funds, the value-add players that have lowered their appetite for return to obviously stop there and shop a little bit of real estate. And the main difference also between, I would say, could it be London and New York, two markets I know a little bit, is that Paris is no trading market. Basically, in London, due to the volatility and the cycle that occurs that we mentioned just a couple minutes before, in Paris, basically when just step into the shoes of a long-term institutional, just buy a building, big beautiful building in the center of Paris, like 3%, 3.25, whatever. And this building goes just out of the market for like 30 years. This never happens in New York or in London. So in London or New York, maybe every 5 years, every 7 years, maybe there's a retrading, etc., etc. And this thing also narrows totally the investment market in France. So you have massive money from domestic players, massive money from abroad players, and few investments to be found. So that creates a strong competition on the market. So when you have beautiful portfolios and beautiful assets, especially in Paris, we'll talk of the region later, but you have maybe 30 to 40 bids, and the prices are going crazy, stabilizing around 3% of yield. But yield doesn't mean really anything. I prefer to talk about values, but as of now, we're way over the peak values of 2007 in terms of euro per square meters. For example, in the center of Paris, we are for some trophy assets we have gone much more than 30,000 euros per square meters. In La Défense, we are retrieving the level we have back in 2007 and even more for some buildings. So it's the next months and the next year to come are going to be very interesting to see where we're going to go versus the peak level we have now.
But I think the only difference I see, at least there's a newcomer, at least for the French market I see, is South Koreans. Normally they were only looking around. For the first time they did some transactions in London, some transactions in Paris. It was for me the first time that I saw them really buying. And the Japanese are also looking nowadays, because they have changed also the regulation for the pension funds with the event they had with the crash of the electricity.
Yeah, but the main money is still from domestic, because if you top the top 3 on the list, it's always the same, that the brokers avec me.
Absolutely.
This is the guy you want in your list when you're a broker.
But they're also buying nowadays for foreign institutional investors.
Yes.
So the money is coming from somebody else. So I think you have to build that also into the reflection that you say, we set up an OPCI for insurance company X, Y, and Z, and which is abroad. And that money will not be regarded as abroad because it's Primordial, it's AEW, and all these guys doing the investment.
It's very difficult with Asian investors because they've made a few transactions a few years ago. There's been a lot of noise about them. And the Asian investors, they don't like the noise. And so most of the transactions which are done now in the account of the Asian investors, they're just unknown. No one knows who bought half of the deal in the account of the Asian investors in Europe now. And you have half of the investment managers who allocate the cash from Asia to Europe who have been fired because there has been too much noise in our own newspapers about them. They don't like that. So there have been many deals in the name of Asian investors in Europe, and for the time being, in the charts, you see just investment managers. And so it's a little bit difficult to provide a reliable answer on that.
And are you seeing anything coming into you? Because you've obviously got into your listed stock. Are you seeing new investors or?
Yeah, no. I go to Asia 2 or 3 times a year, and I used to pay a visit to maybe 15 to 20 investors. What I can tell you is that they do invest, and they know the market very well. We are not only a few research papers, easy to read. They're really on the ground. They really tour the market and they really invest. And I was and from time to time, I'm very surprised to learn that this tower had been bought by this investor because the name, well known in France, was totally different. And we have many examples of that. And the same in London, and the same they start already also in Barcelona. There have been many deals in Germany made by Asian investors. So yes, of course. They are very, in South Korea, but also the Chinese, they are so afraid of the real estate bubble, they allocate a lot of money to Europe. And the same for the United States. They are so afraid of what's going on in the US. So they also allocate a lot of money to Europe, Germany, France, London, and we see the names maybe in 5 or 10 years' time.
But I think there's also already a reaction, at least for agricultural land. France has now changed a little bit the law for agricultural land, that there's a kind of preemption right for the person who is more controlling what's going on agricultural land, because they fear that there's too much take of Asian people on agricultural land in France. So that is really the first reaction I saw on that, because they realize exactly what you are describing. And so far, it's really something which is important. The only one investor who is always playing very openly is Fosun.
Yeah,
Those
sure.
investments, and so far, I think that's something which is also important to say. A lot of people are hiding behind let's say, a company, but Fosun is doing that very openly and doing it well in France.
Maybe a quick one. For foreign investors, I think the main obstacles over the last years have been the legal or the labor legal framework, the tax burden, and maybe sometimes also the non-international mindset of France. But I think obviously the labor framework is changing a lot. What's your view really on the tax burden and what may happen in the next few years for foreign capital investing in France?
Yeah, go ahead, yeah.
I will let my friends talk after, but you point out the three key drivers on which I would say that we're very, very bad at marketing ourselves. But that's the key reason why you don't want to invest in France. But really, we're super bad at marketing ourselves. Because from a labor perspective, if you want to fire someone in Germany, it's 2 years. In France, 6 months. Did you know that? When I heard all these investment banks allocating their teams to Frankfurt, I said, I'm not sure it's a good idea. One of the key drivers for success for your own business is flexibility. You won't find flexibility in Frankfurt at all. It's much more flexible in France. And we don't have to wait for Macron and these executive orders to have such level of flexibility. You won't be in London or New York. It's not a one-week deal with the employees and so on. But it's much more flexible already in France. And we have been so bad at telling the Europe and the rest of the world this fact. I'm very sorry about that.
The good example is Brexit.
The good example is Brexit. There is another thing. When you discuss with your friends working in London, in Paris, and New York, they pay more tax than me.
Yep.
It's true, huh? They pay more tax than me. So yes, there is this 70% thing, which finally really not occur. So newspapers have been very happy to have some material to discuss on. Okay, and we have this impôt sur les fortunes, 1% of the population, a couple of 100 million of tax. But frankly, that's not what's going to drive the success of the country. There's no impact on our success. But this is exactly what you read in the newspapers. So again, we are very bad at marketing ourselves. And when I see my former financial minister gathering the CEOs of the 5 biggest investment banks in New York, the guy was not able to speak English. Can you believe that? He came with an interpreter at a dinner. And the only thing these 3 big guys retain in their mind is, I won't work in France. If the financial minister just can't speak English. And he's right. He's very right. So I'm very happy to see that now we have a finance minister who can speak English, a president who can speak English, and maybe we're going to change a little bit the mindset on France. So I agree, well, we were not an international player, and we have to change a little bit the way to present the country.
Well, I do appreciate we haven't been able to convey the right message, but my point is really, if you look at the corporate income tax, for example, across Europe, France is by far one of the most expensive countries. So the purpose of my question is more for occupiers, when they have to decide on an allocation in terms of activity across Europe. I heard there was some discussion about dropping CIT in France, and I was just keen to hear your view on that. And
I can just add something on this. I think you're right, the tax is an issue. I think Macron said, corporate tax is going to go down over the next 5 years from whatever it is to 25% or something like this. So it's a good signal, and it's completely average for Europe. I don't think people are going to decide on whether tax is better there or elsewhere. But just to come back to what was said previously, I don't think it's true that there is flexibility in the market, employment market in France. It might be the same flexibility as in Germany, but probably less than, say, in Spain or the UK or maybe even Italy. But the cost to employ people in France is much higher than elsewhere. I think tax is only part of the story. The issue is everything that is not taxed. So if you look at an employer in France, he's going to have to pay 2.2 euro for the employee to get 1 euro in their pocket. It's a massive difference. I mean, in the UK, what is it, 1.7 euro? Pound, sorry, for 1 pound. But you see what I mean? It's like you pay a lot of social charges on top of the tax. So the tax is true, I agree, is less in France, but that's really a small part of the equation.
I think it's true. If you look at the individual tax, then you have certainly a lower tax in France and in the UK. But the social charges, as you really lined out, is something which is mind-boggling. On the other side, to take also the example for Germany, everybody is saying the corporate income tax is 15%. Absolutely right, but they have a professional tax, as we say, tax professionnel, which is at least also between 13 and 17%, which is a kind of a second, quote-unquote, corporate income tax. So you end up also by more than 30% of that. So I think simply, you have simply to see how that is balanced and that there are taxes which you are not aware of, which takes you up to the same level. So the 30% in France is at least as high as in Germany, even if the corporate income tax is 15. Yeah. So I think that is something which is important. But I think what is not conveyed is a practice. Everybody's talking about the 35 hours a week. But all companies I'm handling, there's nobody working less than 39 hours and a half. That does mean the companies are paying only the surplus on salary to get them to 39 hours. So that's something which is absolutely normal in all the other European countries. So efficiency is higher than in Germany, and I'm talking as a German to you. So difficult to admit.
But that's true that when you look at figures, the employment cost issue is 10 times bigger than the tax issue. 10 times.
Yeah.
So it's we have to solve this issue. Yes. And Macron, it's on top of one issue on his desk. Employment cost.
And that's why for Brexit, I mean, we are not fighting against Frankfurt or Luxembourg. I mean, we know that if there's any matters on relocation, it's more like in Germany or in Luxembourg because we are bad at marketing. But fortunately, as what's going on right now with Macron and Angela Merkel, unfortunately, I mean, we are discussing that at coffee. I mean, the situation in the US is not, I mean, in terms of uncertainty, you are on top of the list. It gives us more strength within France and Germany. So we are playing more a strong Europe, maybe Europe with, let's say, some leaders and some followers. But for Paris and for France is of importance. So it is true that in terms of marketing and from some corporates, the Brexit will benefit maybe more in terms of moves from companies headquarters to Frankfurt or Luxembourg than in Paris. But in terms of economy and dynamic in the economy, Paris and France will benefit of this large move no matter what because of a stronger EU and German and France, I won't say couple, but alliances.
Okay, good. I wanted to pick up a couple of things which are linked into this. We've been doing a lot recently on the softer, what would have been seen as softer kind of areas influencing investment, like livability, like attracting human capital, those kinds of aspects. One thing is, and sustainability, both in terms of green, but also sustainability of the investment. Now, CeGeREAL, Raphaël, sector leader for GRESB's listed office property companies in Europe. Are you finding now, because you've always been keen on sustainability in that sense, are you finding that that's now actively driving returns because you've also been doing a lot of upgrading the portfolio?
Well, sustainability is, for me, is two things. First, being responsible. And second, improve my returns. And as a matter of fact, now looking back at what we have been able to achieve versus our peers, we can say that definitely accelerate the letting pace. Because big corporates, they never move for environmental reason, they move for rational reason. They want to get people together, they want to work more efficiently, they want to decrease the cost. There are several rational reasons to move. But when they choose a premises, believe me, environmental reason is very important. Of course, location remains critical, efficiency is critical, but if you don't tick the green box, they won't go into your building. And so fortunately, we identify this strategic driver soon, and so we have been quite successful in letting our building a little bit quicker than our peers. And Arc de Seine was an excellent example. This is the third building in France with a double certification, and it had many buildings of the same size who request 1 or 2 years to be let. And Arc de Seine, after 3 months, had been 50% let. And we're talking about a 450,000 square feet building. So it's quite a big building. So yes, sustainability has been for us a very good bet from a pure financial standpoint. But again, I think that now not being green is part of the past. You have to. It's normal. It's been on I would say an objective over the last 10 years. But no, it's no more an objective. It's a must-have. It's normal, and we won't buy any building that we can't turn into a green building, who is not a green building right now.
Yeah, maybe just to pick up on this, it's absolutely true. It's not a nice to have anymore. It's a must-have, and
yes.
well, it's totally incorporated in the market's mind. You have to be green, or otherwise you can't let your building. And the interesting thing, but this was more post GFC reflection. Now the new wave is coming more from all the digital aspects that are featured in your building, and the sustainable wave has totally flown all over us. And now it's more when you talk to tenants, they're more talking about how your building is connected. So they're more looking for some wired certification, for those who knows, or well certification, and it's becoming kind of complex to integrate in some buildings that are as is in the market. So you can totally incorporate this with a new scheme, a franchise agreement. But as of now, and this is also part of the co-working activity that is taking now much more space. And well, the sustainability of the building, yeah, must have. But as your building is connected, do you have the fiber, blah blah blah? I was like, well, what is he talking about? Are you wired certified? What is wired certified? So there's a new aspect which is basically disrupting a little bit the building also from this digital aspect. And well, this is discussion we're having now with the tenants, with the builders, and well, we're learning a lot from the co-working activities. So people from where we work that are teaching us how to make the building live from a obviously human perspective, but also digital perspective. And this is things as international and standard landlord we basically don't know. So this is very fascinating, and I think the next challenge is going to be the digital step and how you transform your working place into a living place, because the new tenant, they don't want to work like basically we started working on, where our dads and moms were working in an office, partition, etc. They just want to be part of a dynamic and totally non-working environment where they're working in. So it's.
I think that's very interesting as well. Sorry, when you talk about location being so important, I mean, if you're in residential, you might want to be near Saint-Ouen and Saint-Denis, as Oliver mentioned rightly, and you have this big connection there where you can go all across Paris from there. If you're in an office building, you might want to be near a data center with very high connection speed. Does that mean you're in the QCI? Probably not. It might mean as well you're actually close to Saint-Denis, because that's where most of the data centers are. So if you look in 10 years' time, what is going to be the first requirement of some of these occupiers? Well, you might want to think ahead.
So closeness to data centres may be an important indicator of...
In the future, might be, yes.
Or having the right connection, the black one, as we say in France. And we are speaking about users' experience, UX that we have in front of our smartphone or whatever. It's now within the company, the corporate, and the co-working brought this aspect. So now we think about our tenant as clients, and then the clients of our tenants are their workers. And when we think about the buildings, we have to think about what will be the human experience within the buildings. And as you said, being green is, just you need it. And to a certain point, fortunately, we've done that. It's not a question when we do large office scale. But now the key point is how you bring some human experience within the office. So you put the human first, but the human together, they make the company. Then we speak about with the potential tenants. And technology is key. In Sandy, for example, data center are located over there. EDF, Electricité de France, they say now they don't want any more data center in Sandy. They want them to put in Gennevilliers, for example, because they take too much power. And they say first, the power, electricity should be directed to residential and office. So when you look at the Grand Paris and all the playground that is going to be modified because of the 200 kilometers of automatic metro line that is going to be created, that's where we're going to find new place to live and to work into data center. So I'm doing my Invest in France agency speech, but for once, France is a place where we can find some business and there's some opportunities.
And Serge, I wanted to pick up with you, picking up the point on Grand Paris and also the regions. Does that mean now you would be looking differently in terms of when you're lending into some of the locations that actually you might think at the moment, I wouldn't necessarily lend there, that now you are thinking about locations driven by either what's happening with infrastructure with the TGV, or what's happening with Grand Paris, or what's happening with the Olympics?
I think there's nothing really new in the way we look at things. I think it's all a matter of connectivity, and if the building is well located, the location links to connectivity. And of course, now if we look at buildings that are not in central Paris, it will be something that we can that banks are able to finance as long as connections are good and that you can go to the airport, to central Paris, etc. So I think this is clearly something that will develop maybe new opportunities to finance elsewhere, a little bit the outskirts of Paris. And for regions, I would say that looking at, I think some regions are being financed easily, like maybe in Lyon or Marseille. I guess Bordeaux is better connected now, but it's maybe a smaller market. So, but I think some regions are clearly banks are able to finance easily some regions.
I was actually just because there's been obviously a lot of sectors talked about, and we are in the hotel space, and I've not heard anything about that particular sector. So I'm interested to hear views. Clearly, the labour law discussions are very pertinent to us as an operating business, and has potentially been badly marketed. But equally, the costs are there, and we do need to understand them before we actually go and acquire. Views generally about the hotel market as an alternative asset class would be greatly appreciated.
And are you looking at Paris and regions, or what's it?
Primarily location driven, I guess, but early days in terms of where we can go outside France, but Paris is the general point.
Okay, hotels.
I'll just say a word on that. If you look across Europe, first of all, France will be probably the most expensive place in Europe. Yeah. But that's not to say that you shouldn't be investing in France in hotels. There's probably very good reasons why it's that expensive. I think there's a barrier on entry in France because you need to get your mind around for lots of these hotels about the separation of mur et fond. So the separation between the real estate and the actual business, unless you buy both. And that's something I think, at least for us, our investors have struggled to understand, just like some investors are struggling to understand leasehold in the UK. it's a different set of rules. That's why I think the hotel is very dynamic in France, but as an international investor, I think it's a difficult market.
But one of your concerns, if I'm reading it right, is the cost of employees that you might have to...
It's one factor. I mean, I think at the end of the day, we buy the business as well as the real estate, so we understand both and we actually value in both. But at the end of the day, so the labour laws obviously are the operating asset, and it is about getting our head around the differences, in terms of having operated in other parts of Europe. France does actually stand alone in terms of some of the ways that they do things, and so underwriting and acquisition becomes that much more spending the time to actually get a head around.
And for us as an investor in the real estate, we have the same issues because we need to worry about what the operator is going to be doing in the future. Are you a management contract, is it a leasehold, is it a franchise, whatever it is. It's a bit more complex in France. On top of that, it's a bit more expensive. But it's the place in Europe for tourism. Business is very good. So there is growth. So why not? But it's a challenging one.
Put it this way: over the last 2 years, my business has changed by 30% to the hotel business. But we do development in the regions. We buy. For example, we have bought in Cognac a distillery, which was run down, and we would transform it in a 5-star hotel for one of the high net worth individuals, as we say nowadays. So that's something we're doing. We see the same person buying a hotel in Brussels, saying, well, Chinese and other people getting there, and I bring them to Cognac and then to Bordeaux, and now I buy something in Bordeaux. So it's simply the story about what you're seeing. So I think we heard this morning Paris is one of the first destinations, at least in Europe, with 25 million people visiting. The mayor of Paris is saying that we don't have sufficient hotels. Not the luxurious hotels. I think there's currently sufficient 5-star and Palace, 2- and 3-star hotels. That's something which is missing, because not everybody would like to pay 500, 1,000 euros a night. So, and so far, I think we're looking into that, and we see also people coming who provide different sets of hotels. Yotel is coming, they would like to do something. There are a number of different things which are now more or less experienced in the city. So I think it's a sustainable market. I see a lot of people willing to do something in the area, and unfortunately they very often don't take credit, because they say we have so much equity, we do it on equity. So that's something which is really astonishing to me. And Asian hotel groups, which are big in Asia, they would like also to get into Europe. So they are competing on 5-star hotels with all the others. And there are not so many 5-star hotels for sale in Paris, to be frank. So I think it's difficult to get the right caliber, but there are niche markets. I think there are family-run hotels which with 60 rooms. Is that sufficient to be profitable? Question mark. But they need money for simply doing the refurbishment work, getting them accessible for disabled people. All these things we have postponed legally because we know that these people go out of business because they don't have made the profits in the recent years to do the refurbishment work, get it accessible to the disabled people. So there might be something where an investor comes in and says, look, I buy the hotel, but we do a sale and lease back because you run it perfectly well, but let's say you how to do it now. There are possibilities to get into the market. It might not be straightforward. I buy and I run it, but I think you must be creative about it. And going also to the 14th, 15th arrondissement, which are very nice places, and which is perhaps not so costly than being really in the 8th or the 7th and 6th.
With the new metro line, some metro line like the 14th extension or the new 15 automatic metro line, they're going to bring Paris, centers of Paris, closer to maybe between 20 minutes or 30 minutes gain to a certain city on the first order rings. So in terms of hotel localization, there's where you can find some good localization, and for some tourists, some of them are used to, especially the Chinese tourists, to have an hotel out of Paris and then to take the metro. So with the new metro line, you will have some good opportunities.
I think the general comment, I think at the end of the day, sharp yields are sharp in France compared to other parts of Europe, and then when you combine that with the labour costs and the laws around that are relaxing and are changing now, I think the combination of those two has made it more difficult in comparative terms compared to other parts of Europe. But hopefully that'll change, and I think the demand is there. So the question is getting the right time and the right opportunities to
it's kind of an entry barriers for your competitors. Yeah. Because, as Raphaël said, we are poor at marketing. So by saying it's tough to work in Paris, to do business in France because of the level law, it's expensive. But the ones that are located in Paris, hotels, business, they have no problem with that because they know how to run it. So it's true that there's a cost, there's a learning curve for you. But for them, it's more like to have an entry barrier to say, fine, if you come, it's going to be tough. It's feasible, and it's true that the depth of the market should remain stable and increase with developing games and transportation.
But let's start with you, Arnaud. If people were looking to invest, where do you think the best opportunities are? Whether that's sectors, locations, your choice.
I will look at first southern ring of Paris. As I said, line 15 and 14, because it will be the first one. And they are line connected to the center of Paris. And I will also look at the northern eastern suburbs in Paris. 19, 20th, 11th suburbs. Whereas what has been done in the 17th suburbs, like called Bacconnier. There are some place over there in the 20th, 19th, 11th, 11th, 12th, where there should be nice office development and restoration. And we are working, so that's pretty straightforward, and I do think that's really something that you can rely on. And the managed residencies business in France, we're not going to talk about that right now, but it's something where there's a lot of reflection and potential business to be developed due to our pyramidal age. So senior residence, managed residencies, and due to the birth rate in terms of new business model for student housing.
Okay, good, thank you. So we've got kind of regional Paris, residential and student housing. Okay, great. Serge?
I would say just a general comment is if you're looking for value add, of course you will look more in the outskirts, because today in central Paris yields are pretty low, and it's pretty much trusted by long-term institutional investors. So it really depends what type of investor you are, but I would say central Paris today, or even La Défense is a playground where it's difficult to find a product today, because it's already captured by some institutional investors.
Okay, Alfred.
I think if you talk about Paris, I think micro living, something where nobody has for the time being put really a feed into that. I think if you see simply the demographics and the single person households in Paris, people who start to commute from Nantes over the week to Paris, getting back to the family over the weekend, I think that's something I would look into. Generally student housing, I think that's certainly, looking at the demographics, a big problem. If I see simply the service rooms which are rented 9 square meters for 700 euros a month, so you see that there's really a demand for accommodation for students. And then I think in the region, I think Toulouse is certainly something which is great, Bordeaux, and eventually Nantes, even if it's a very small market, but I think economically speaking, it's quite strong if you see the industry which is around.
Okay, good. Raphaël?
Well, CeGeREAL is a strong buyer, so I'm not sure that I want to have more competition in the room. I would say that CeGeREAL focus is really to invest in the Grand Paris and all the beautiful development that will arise from the new transport and the new connectivity, and not only transport but also internet fiber and so on. So this is definitely our bet, and so this is where I would invite you to focus on also.
Okay, Guillaume.
When the core locations are getting too yieldy, basically the only solution that comes up to investment managers are the ABBA solutions. So basically buy A buildings in B location or buy B buildings in A locations. So this is basically what people are going to do. Obviously there's a Grand Paris scheme that is definitely interesting. Just to illustrate this, in my former company at AEW, we secured a forward purchase agreement on the top of a brand new Grand Paris station, which is called Rosa Parks, in tribute to the lady in America who stands up for the Black American rights. And it's facing poor residential building. It's though it's 7 minutes away from Gare Saint-Lazare, which is like one of the main stations in Paris. We bought this for approximately a little bit less than 8%, as no one was willing to fund the developer that was willing to develop that building. And when the station was there, we had a tenant, thanks to a former colleague of yours. And as of now, it's the building is as from already. We have signed a 12-year firm lease with a AAA tenant. And as of now, if this building were on sale, it would be approximately around a 4 to 4.5% yield. So the thing is, really focus on Grand Paris and close to the central station, because there's a lot of value. Center Paris is going to be very close to all, the away neighborhood that has been all around Paris. And also, I would say that Nanterre and Levallois are now two destinations that have been forgotten, but are getting their leasing activity back. So it would be good places to look there. And I would moderate, I'm sorry for this, Arnaud, on alternatives, because why is everyone looking at alternatives? Because when you're used to buy retail at 3% or even less, obviously residential at 4% or senior housing or medicalized housing at 4% looks attractive. But, I think there's more value to be taken from new schemes to be built and linked to Grand Paris, or forgotten places like, for example, Nanterre or Levallois, that have on the long term pretty good arguments and that are willing to take the crown back.
Okay, so leverage off the new infrastructure. Ludovic.
Oh yeah, well, apart from investing in CeGeREAL, because I think it's pretty good, so we can. No, I mean, I'd do anything that's residential. I think it's a mix here in the panel in terms of residential and offices. No, we'd love to get into residential. I think it's very tricky to get in there. There's been one good deal this year with private equity, Bridgepoint buying groups here. I think fantastic deal that we missed out on. If there's anything like this that comes back, we'll be there. But I think it's a tremendous opportunity at the moment in France, the residential, given where I think risk return in the offices is.
Okay, great.
But Bridget, there might also be something with e-commerce and wishing to order something, gets a parcel or whatever delivered in 1 hour. I think it's a small logistics center in the city itself. They transform an office space into a small logistics center for books for I don't know what. That's something everybody's also looking into, and I think that's something which is coming. Look, Fnac and all these mega stores who are holding themselves out, being able to send the product within an hour to you. How do you do that if the small logistics center for the small items is not very close in the city? So I think there's also something for opportunistic investors to look into. An office what you cannot track down, what you cannot transform into a green building.
But this is maybe the future for most of our parkings and in Paris and all shopping centers. They will be turned into this storage and distribution center.
with drones.
And there have been already some thoughts about renting the parkings during night to these guys, and as an additional revenue. And they really need it, so they will come.